Blockchain boom. Billionaire investor Mike Novogratz says it's only the beginning of the cryptocurrency craze. How one of the biggest bulls is trading crypto's ascent, and what else he's trading. We'll give you all the details this hour. Let's take a look right now at futures just before the market opens. FTSE futures have been up and are still gaining 0.5%. We don't see a lot of direction on the continent. You can see DAX futures are down 0.1%. French futures, CAC futures are up 0.1%. Here's the global macro movers screen. You can see the equity indexes in the left-hand column, and it will populate as they open up. The FTSE is always the first out of the gate, and the FTSE is on the rise this morning, now up almost a quarter, almost a third of 1%. The IBEX now open in Madrid, gaining 0.2%, so the Spanish benchmark doing better. The CAC 40 in Paris is open up 0.1%, as is Germany's DAX index in Frankfurt. So European equity indexes are on the rise this morning. Maybe some of that global growth optimism is spreading out to equity indexes, and we'll continue to see new record highs, for instance, on the Stock 600 here, and new record highs. Maybe we'll see another one today. We're only 0.1% away on the S&P 500 when they open up in New York at 9:30. Now, Credit Suisse's bill for the Archegos fund blowup currently sits at $4.7 billion, but it could be even higher. That is according to JP Morgan analysts who see the possibility of another $4 billion. The scandal has already cost top executives their jobs, others their bonuses, and the lender has scrapped its dividend and suspended share buybacks. So that is a story that we're going to continue to follow for you. Another one of the big stories this morning is Mike Novogratz. We had an interview with him. He says NFT is the latest buzzword in the blockchain boom. Of course, something we've been talking about a lot lately. Galaxy Digital founder and CEO Mike Novogratz says we're only in the early days of the crypto art craze. The billionaire investor told Bloomberg that global wealth in cryptocurrencies will just keep growing.
What's the S&P on the year? Up small, and Bitcoin is up 100%. And this week, Ethereum, which is the second largest cryptocurrency, had a monster move. And so what you're seeing is money continue to pour into the space. We just went over $2 trillion of wealth, market cap in crypto. And so that's a pretty significant number, right? You think about it, there's $140 trillion of U.S. wealth, $400 trillion of global wealth. So we're now up to half a percent of global wealth is in crypto, and that's growing. I think it'll be 1% by the end of the year.
We've seen a lot of usage in digital art, but where do you see this going? What else can this actually be used for?
NFTs are going to be with us for the rest of our lives, right? Art on the blockchain, collectibles on the blockchain, IP on the blockchain. It's all happening, and we're in the very, very early stages. So much that there's little mini bubbles that'll pop up and down, but don't miss the big picture. This is fundamentally going to change how we secure intellectual property from now going forward.
So am I right to make the distinction that this isn't necessarily a Bitcoin boom? This is a crypto, an Ethereum, a blockchain boom as well that you're following?
100%. Listen, Galaxy Digital was set up to participate in the whole ecosystem. We've made investments in over 100 companies in and around the space, from DeFi companies to protocols to security companies to custody companies and to DeFi companies. I'm sorry, to NFT companies.
Talk a little bit more about how it's now not only starting to appeal to corporations, but there's been a lot of talk now of how governments could actually start getting involved in this. What happens if that happens? Because I keep hearing it sort of pitched as a good thing, and I'm not quite sure I understand how.
Well, listen, there's a bunch of different lanes in crypto. So Bitcoin has carved out this lane of store of value, of digital gold. And so most governments don't care if people are putting their money in gold. Listen, if they do a horrific job managing their finances, more people are going to want to take their money out of that country and put it somewhere else that's safe. Right now, Bitcoin is being seen in the digital world as that place. I don't think Bitcoin is going to be what we use to buy shoes or sunglasses or Diet Cokes. Right? You're going to see a war in payments where stable coins, central bank issued digital currency, stable coins vie for that space.
And that was Mike Novogratz, Galaxy Digital founder and CEO, talking about cryptos as part of what he calls a blockchain boom. He also was talking in that interview about shorting rates. Fascinating stuff. We're going to play more of it for you throughout the day, and you can see it on Bloomberg.com. I want to quickly tell you about the Indian rupee falling to its weakest level since November 23rd. You can now buy 74.22 rupee with $1 US. So the Indian currency continues to weaken against the greenback. Let's get the Bloomberg First Word News now. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. A trial of AstraZeneca's vaccine in children has been paused while the UK's drug regulator investigates rare cases of blood clots in adults. Meanwhile, Moderna is to be rolled out as the UK's third vaccine option starting from today, 2 weeks earlier than expected. That's as a new study finds antibodies from the shot remain active for at least 6 months.
Whether it's a variant vaccine or the original vaccine or some combinations of these, we want to be 1 or 2 steps ahead of the virus as it manifests changes to fight back against our immune systems.
President Joe Biden says all Americans over the age of 18 will be eligible for a coronavirus vaccine by April 19th, 2 weeks earlier than the previous goal. He also warned that while there's been progress against the pandemic, new variants are spreading quickly. Separately, the White House has ruled out so-called vaccine passports, citing concerns over privacy. Russian opposition leader Alexei Navalny, who has been on a hunger strike since last week, has been moved to a prison infirmary. According to a statement on social media, Navalny has a fever and a severe cough and says 3 other prisoners in his unit have been hospitalized with tuberculosis. Officials say he's getting adequate care in the prison, refusing a request for outside medical treatment. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt.
Laura, thanks very much. Laura right there in London with your First Word News. Coming up in the next hour, we speak exclusively to French Finance Minister Bruno Le Maire, or rather Francine Lacqua will. That's at 9 a.m. London time. An interview you don't want to miss. This is Bloomberg.
minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries.
We are not seeing any kind of a systemic debt crisis. We have a world that's recovering strongly, and it is good for everybody when there is high global growth, especially if you're a large trading partner of the US. That helps you. In general, more generally, if you're an exporter, you benefit from it. And we know that, when there are periods when interest rates go up in response to positive news, that's not terribly damaging for emerging markets. But on the other hand, with the faster recovery in the US, if there is a surprise tightening in financial conditions, then that, of course, is a concern. But I'm just going to mention a couple of things, which is unlike 2013, many emerging markets have much larger foreign exchange reserves, and they have much smaller current account deficits, which is their external borrowing that they're doing right now is not that high. But on the other hand, they are in a deep crisis and they have fiscal needs. So I think we could see countries that have very high levels of vulnerability, high foreign currency borrowing, high dollar borrowing, that there are risks to them. But again, it's not like we are seeing any kind of a systemic debt crisis.
That was IMF Chief Economist Jita Gopinath speaking after the fund upgraded its global economic growth forecast for the second time in just a 3-month period. So very interesting to watch those meetings, and they will continue throughout this week. We'll hear more from, for example, Jay Powell on Friday. Now, we are just 12 minutes into the session right now. You can see that the FTSE is up 0.5%, and the DAX and the CAC are gaining as well, but the Stocks Europe 600 is actually down 0.1%. So in terms of what we see on the broader indexes, it is a drop in Amsterdam, a drop in Stockholm, and maybe a drop in Zurich that's weighing us down here. We'll keep an eye on that because the Stocks 600 is near its all-time record high. Let's take a look at what's on the move this morning in terms of individual stocks with Bloomberg's Danny Berger. Danny, what do you got?
Matt, Ryanair falling today. They did warn about lower traffic volumes for the fiscal year of 2022, given that the vaccine rollout in Europe has slowed. So that warning there is sending the share down by nearly 1%. Flutter, the biggest loser to the downside in the Stock 600 so far today. Currently, they're facing a suit by Fox, that's the Murdoch-owned company. It has an option to invest in FanDuel. FanDuel is owned majority by Flutter, and there's an argument there about the valuation that Fox would pay. Finally, let's get a mover to the upside here, and that's going to be Amundi, one of the biggest gainers today. In a $980 million deal, they're buying Lixer Asset Management. That's from SocGen. SocGen also rising today. It's going to make Amundi the second biggest ETF provider in Europe. Finally, let's get that macro picture. Dollar does look like it might be able to break some of that 4-day streak of losses that we've seen it post. This is ahead of the Fed minutes, but you have to wonder, while we wait for those, is there not really a catalyst that can take the economy higher at this point? We're looking at copper down 0.8%. And as those growth sensitive type assets don't get that catalyst higher, will that carry over to equities? At the moment, U.S. futures just barely hanging on to gains, Matt.
All right, Danny, thanks very much. Danny Berger there, looking at some of the individual movers. I'm noticing on the downside, the big weights on the stock 600 index, Novartis and Roche, as well as ASML, and as she mentioned, Flutter, holding the stock 600, the broader benchmark, down. Let's stick with Ryanair, though. The airline says it will struggle to make a profit this year as travel restrictions and a slow vaccine rollout delay a recovery in air travel. In fact, it says it'll make a pretty big loss. As recently as March 24th, the CEO, Michael O'Leary, has remained optimistic for a bounce back, but we've gotten new news since then from, for example, Boris Johnson saying he'll extend an international travel ban. Joining us now to talk more about Ryanair is Siddharth Phillip from our transport team. So what is Ryanair telling us now about the loss? Isn't it better than what they previously had expected?
Morning, Matt. So yeah, Ryanair is forecasting a slightly lower loss in the current fiscal year that ended on March 31st. But they are also warning that they do not share the optimism about FY22. That's the year that began April 1. And they believe that the best outcome is currently close to a break even. So they aren't really very sort of sure about what's really going to happen in the year ahead. And that's partly due to the fact that across Europe, we're seeing lockdowns being reinstated, and also there's also skepticism about whether or not travel from the UK might start on May 17th or not. So I think that's all weighing in on revenues for the summer. And as you know, summer revenues are crucial for airlines, and Ryanair is one of those airlines.
Of course, it's vacation time when everyone has to travel and business doesn't stop, so that normally is happening as well. I wonder what has changed in Ryanair's thinking, given that Michael O'Leary told Bloomberg just at the end of March, just a few weeks ago, that he expects summer traffic to actually rebound. Listen to Michael O'Leary in an interview.
It's not certain, but I think there's a reasonable grounds for optimism that once the school holidays arrive, June, July, August, that we will see, I think, quite significant recovery of short-haul travel within Europe. You won't see long-haul recover this summer, but again, a lot of people who would normally have gone long-haul for their holidays to the States or to Asia will holiday at home in Europe, and we think Ryanair will be the beneficiary of that.
So what's changed since then? Is this Boris Johnson, for example, extending the international travel ban and saying it could go even beyond May 17th?
I think that's partly to blame, and Ryanair is also blaming the slow rollout of vaccines in the EU, and obviously the new lockdowns that are coming up in France and other places. And I think that's all playing into the various reasons for Ryanair not being as bullish about summer as it was just a week or two ago.
Sid, you're in London, right? Talk to me about what this international travel ban really means, because all of my friends who live in London seem to have no problem flying to Paris for business or going to Florida to get a vaccine. I mean, people are leaving the UK. Are they just cheating?
According to the rules, you can leave the country for a variety of reasons, including business, education, and a whole bunch of other reasons. And the government has made it tougher and tougher for people to leave. I mean, remember that they banned travel from the UK at the beginning of January, and now they've sort of followed that up with penalties as well of up to £5,000. But that really, it doesn't really seem to be stopping a lot of people from traveling. At the same time, a lot of people are looking to sort of travel around and make the most of summer. So it's already a question mark at the moment, really.
All right, Sid, thanks very much for joining us. Sid Roth-Phillip from our transport team on the Ryanair story this morning. Coming up, the UK begins rolling out the Moderna shot. Maybe this is one reason that people are willing to cross borders, because a lot of Brits have already been vaccinated. Evidence showing that immunity lasts at least 6 months maybe adds to their bullish outlook. We'll discuss the speed of the vaccine rollouts next. This is Bloomberg.
Has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim, we're going to be riveted to that, and we're going to do what is required.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
Short a lot of interest rates, right? The one story that could hurt this asset price inflation is that growth happens so fast. Everybody gets jabbed. We get the explosion of growth. We get 1 million jobs, then 1 million jobs, then 1 million jobs, and that pal by Jackson Hole flinches. It says, I've got to taper. And so to me, being short the 5-year part of the yield curve is a great hedge for any portfolio, crypto or non-crypto.
Very cool stuff there from our interview yesterday of billionaire investor Mike Novogratz. I want to move, though, back to the vaccine story. The UK is going to begin rolling out the Moderna vaccine today. That comes amid concerns over the AstraZeneca shot continue and a shortfall of doses this month. The Moderna vaccine, though, on the positive side, is the 3rd approved shot in the UK. The success of the vaccine program crucial to Prime Minister Boris Johnson's plan to fully reopen the British economy in June. For the latest on the vaccine rollouts, let's get to Sam Fazeli. He leads our pharma coverage for Bloomberg Intelligence. You know him well from this program and others. And Sam, I just want to tell you something, a really positive anecdote I heard from an IMF interview that we were doing yesterday on Bloomberg Radio. As you know, I am very annoyed that I haven't been able to get a vaccine, that nobody I know in Germany has been able to get a vaccine, while everyone I know in the U.S. is fully vaccinated. I talked to an IMF official in Frankfurt who said the reason is Germany follows really a more multilateral approach. You don't want a country like Germany to have an America first type strategy for obvious reasons. And Europe in general is allowing exports of this vaccine to poorer countries in the underdeveloped world because they want everyone to vaccinate, at a similar pace. That seems like a pretty good excuse to me. Is that, do you think, to some extent true?
Oh, Matt, I would love that to be true. It doesn't quite tally with the shouting and screaming with regards to where are our doses, and if you don't deliver the doses that we asked for, we're going to stop vaccine being exported to other countries. If that is true, why has Italy held back doses to go to Australia, et cetera, et cetera? I would love to live in that world, but I don't think we're actually living in that world.
I mean, maybe just because the Australians are also subject to the Queen. I was hoping that the EU just wanted to stop exports to the UK as part of the Brexit fight. But on that note, Sam, I mean, how important is it that we get everyone vaccinated? We're so focused, or at least I am, maybe it's my fault, on the US, the UK, and Europe. How key is it that we get Sub-Saharan Africa vaccinated, that we get all of Asia vaccinated in order to, bring this global pandemic to an end, as we hear all these concerning stories about, well, not only the problems economically, but also about the variations.
It's totally critical, Matt, because at the end of the day, when you have I'm going to use a metaphor here, when you have a row of houses on fire, it's not good enough just to put one house out. You have to put the whole lot out. On the other hand, human nature suggests that you're going to run first into your own house to rescue whoever your beloved ones are in there. So it's an unfortunate balancing act that's very tough to manage, because your electorate in Germany, in France, and everywhere else are sitting there suffering, expecting vaccines and doses, and at the same time, as an international body, that if you don't put this virus out elsewhere, it's just going to keep coming back, and also create potential for variants, etc. So it's a very tough balancing act. But I think a lot of countries are going to focus on trying to get their home sorted first before they spend an enormous amount of energy helping others.
Right, you got to put on your own mask before you put on a mask for someone else. But I think it's a story that maybe it's not underreported, but it's maybe one that I haven't been paying enough attention to. And Bloomberg has a great piece today out about the contraction of the middle class for the first time in decades, and the repercussions could be long-term. We'll continue to talk about it. Sam, thanks for joining us. Sam Fazeli from Bloomberg Intelligence.
That Norway sells way more electric cars per capita than the U.S.? Norway. Well, I won't stand for it.
In this neighborhood just outside Oslo, the majority of cars are electric. Last year, Norway became the first country in the world to sell more electric cars than any other. In December, EV market share was at 67%. In 2025, the country wants all cars sold to be zero emission.
Hey, Norway, listen up, you fish-loving... Oh, this place is adorable. Damn it.
But why is Norway leading this development? The country is rocky, it's ice cold, and with huge distances. The easy answer is politics. By giving the consumers benefits that pay off, more people will go electric when they're getting a new car. These perks could be no VAT when buying the car, reduced tolls, the possibility to drive in the bus lane, and quite a bit of free parking as well. 2021 is an election year in Norway, and the Climate and Environment Minister Sveinung Rotevatn believe the EV perks will be a hot topic in the campaigns, where removal of the perks is set to be a central issue.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to Bloomberg Markets. This is the European Open right now, a half hour into the session, and we're looking at gains of 0.8% on the FTSE. The CAC 40 is up 0.2%. Now the Stoxx 600, the broader benchmark index, is gaining back to hit new record highs. Let's take a look at which sectors are on the move using the group ranked returns screen. You can use this on any of the bigger indexes. And you'll see here that auto parts and automakers are big gainers again today. Insurance is up again today, as well as banks. You've also got telecom and media, the old TMT sector. You know, I started my career over 20 years ago covering TMTs. On the downside, tech stocks are the biggest loser. Travel and leisure, as Anna would say, I'll pronounce it that way, for her today, and then healthcare, as well as consumer products and services, I guess, CP&S. There's a new lettering system from the S&P. In any case, let's get your Bloomberg First Word news right now. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. The trial of AstraZeneca's vaccine in children has been paused while the UK's drug regulator investigates rare cases of blood clots in adults. Meanwhile, Moderna is to be rolled out as the UK's third vaccine option starting from today, 2 weeks earlier than expected. That's as a new study finds antibodies from the shots remain active for at least 6 months.
Whether it's a variant vaccine or the original vaccine or some combinations of these, we want to be 1 or 2 steps ahead of the virus as it manifests changes to fight back against our immune systems.
President Joe Biden says all Americans over the age of 18 will be eligible for a coronavirus vaccine by April 19th, 2 weeks earlier than the previous goal. He also warned that while there's been progress against the pandemic, new variants are spreading quickly. Separately, the White House has ruled out so-called vaccine passports, citing concerns over privacy. Iran says talks to restore its 2015 nuclear deal with world powers were constructive, but it's still demanding that the U.S. removes all sanctions for real progress to be made. Tehran rejected a U.S. proposal to release $1 billion of frozen Iranian oil revenues in exchange for suspension of its production of enriched uranium. Iran's lead negotiator says diplomats will meet again in Vienna on Friday. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt.
Laura, thanks very much. Laura right there with your first word news. Now, the emergence of a global middle class has been one of the most significant trends in the past few decades. Certainly for macro investors, that's true. But that phenomenon has been upended by the coronavirus pandemic. The demographic shrank last year for the first time since the 1990s, with about 150 million people falling out of the middle class, the global middle class, down the socioeconomic ladder. Let's get more with our senior Asia economics reporter, Michelle Jamrisco. And Michelle, it's an incredibly, I think, important story that you and the team have worked up here, especially for, as I say, macro investors and economists. When I first read the first few paragraphs, I thought, well, this is no big deal because we're in the midst of a recovery and all of the jobs lost will come right back with the same wages or better. But then I realized there's a massive divergence in the way economies around the world are recovering. It's not all about what happens in New York, right?
Well, that's right, Matt, and good morning. I mean, we're really having to pay more attention to that bifurcation story. I mean, we've been hearing the warnings from the likes of Gita Gopinath, Kristalina Georgieva, Carmen Reinhardt, all at the IMF and World Bank, which are addressing this week at their meetings. And we've heard it throughout the crisis from some corners that the emerging markets are not recovering fast enough, that this will come back to haunt not just the EMs themselves, but for developed markets and the global economy as a whole. But we're really seeing it starkly in the numbers. With the statistic that you cited, as well as a similar one where the World Bank is staring down the first significant increase in global poverty in 20 years from last year. So in their latest estimates this week on global growth, the IMF said again that advanced economies will recover faster, even though they upgraded their whole global economy growth outlook. They did warn that EM and developing economies might not see those pre-pandemic levels until 2023, a full year later than a lot of most advanced economies. So that is certainly a warning to all, including investors and economists, and especially for those consumers in those markets, that the recovery is not, totally underway in a lot of places and might take longer than some expect. So our point in the story was to kind of take a look on the ground, get a feel for some of these people whose middle class status is under threat, what exactly happened to them, and whether they see their hopes shattered or if they have some hope that government support and other measures might help them out and assist them as they try to adapt to this new economy.
Yeah, so Michelle, some Western economies, not Germany to be clear, have said that they'll see herd immunity as early as like June or July, but clearly that's not the case for the rest of the world, right? And while maybe risk assets have come back even in emerging markets, so people with higher incomes that are exposed to the market are fine, the jobs have not, because the virus is still spreading. How much harder is it for people in the middle class? And to be clear, you're talking about what? People who make $10 to $100 a day in terms of the global middle class.
Yeah, well, certainly, I mean, it's hard to define it in one fell swoop, and we do kind of outline some of the numbers that some of the international organizations have used to kind of define the middle class. But one of our points was to look at each of these different economies and have the people themselves define what's middle class and decide whether they felt they were in it and had been in it, or if they were dropping out and would never get back in. But, looking across India, Brazil, South Africa, Thailand, the ones that we focus on here, I mean, I know it's hard to find any commonality across four emerging markets in any aspect. But looking at these and really diving into what happened to these people with that sort of status, we found, of course, job loss, different and lower streams of income, rising food costs that certainly hamper emerging markets more than advanced economies, foreclosure and inability to pay rent. So a lot of the problems that, might be faced by some lower income folks in advanced economies, but not as many solutions and slower solutions. I mean, a lot of these governments were able to promote the stimulus programs and try to get targeted stimulus and support to those consumers that needed it, to those low income folks especially, and middle class folks. But that has been the big challenge in this pandemic. And right now, all these EMs are also dealing with, slower vaccination drives. We see the likes of the U.S. and UK roaring back, but now we see a little bit more vaccine nationalism, especially in places that are seeing resurgences of the virus. So it's going to take a while for a lot of this to filter through to the economies that need it. And by the way, some of these economies are disproportionately reliant on tourism, like Thailand, and are dealing with a longer timeline for the loosening of travel restrictions, which is only going to hurt their economies even longer.
I mean, I'm chomping at the bit to get back to Indonesia and hope I can do everything I can for their economy. Michelle, multinational corporations, you make this point, part of their strategy for decades has been the growth of the global middle class. And, you know, what can we do in order to fix this problem? Because we want them to get back to earning money so they can buy stuff, right? So what can we do? Is vaccinations the main answer?
I think that's certainly the top priority right now. I mean, especially, you know, going back to World Bank and IMF, their message throughout all this has been pretty consistent that you need to do the vaccination first. You know, the message of not just those organizations, but other governments is, you know, no one's safe until all are safe. So you'll probably hear a lot more of that, especially as we see resurgences of the virus in places like India, Philippines, and this region are two, you know, places that we're really focused on right now, and certainly are having an impact on markets and how investors think about where to put their money. But so that's probably priority number one. And second, I would think that a lot of the stimulus, trying to make sure that, you know, it doesn't completely run out, that there's no sort of cliff. You know, of course, we heard a lot of this talk when the U.S. came out with its latest fiscal package. A lot of governments don't have the luxury of, you know, pumping out trillions more dollars. So there's going to be a question of how long to keep up this support. But lastly, you know, it's just a question of the timeline on how to loosen those mobility restrictions. And certainly, again, you know, that's something that Thailand is facing, having relied on about a fifth of their GDP, relied on tourism for about a fifth of their GDP pre-pandemic. They're now struggling to figure out, you know, okay, how can we attract those tourists back? How much do we loosen restrictions in order to kind of get the economic growth that we need?
Michelle, thanks very much for joining us. It's a really well-reported and written story, and I know you worked with a huge team to put this together for Bloomberg, and I appreciate it. Michelle Jamrisco, Senior Asia Economics Reporter. I recommend everyone go on the terminal or the web or get Bloomberg Business Week to read this story about the shrinking middle class, which is happening for the first time in a decade and is unlikely to be just a blip. Coming up, the UK begins rolling out another vaccine, the Moderna shot. That, as new evidence shows, immunity lasting at least 6 months. We hear from the co-founder of Moderna next. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to Bloomberg Markets. This is the European Open. 45 minutes into the trading day, we see the FTSE up 0.8%. Not a lot of movement otherwise in terms of European equity indexes. Moving back to Asia for a moment, we're getting headlines out from an exclusive interview with the president, Joko Widodo. Jokowi saying that the Bank of Indonesia mandate should include growth and jobs, that Indonesia's GDP growth will rebound to 7% year over year in the second quarter, and also talking about various other issues like an investment in Tesla, or discussions with Tesla on an investment in Indonesia. You can watch that exclusive interview with our Haslinda Amin throughout the day on Bloomberg Television, and you can also see it on the website at Bloomberg.com. So we'll bring you more from that later on. Right now, I want to get a Bloomberg Business Flash. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. Well, Amundi has agreed to buy SocGen's Lyxor in an €825 million cash deal that will see it become Europe's second biggest provider of exchange-traded products. The two firms have entered into exclusive negotiations and expect the deal to close by February of next year. After the acquisition, Amundi will have about 14% of Europe's ETF market. Ryanair says it will struggle to make a profit this year after travel restrictions delayed a recovery in air travel. Europe's biggest discount carrier forecasts traffic for the fiscal year just started will probably fall at the low end of a previous estimate of between 80 and 120 million people. Earlier this week, the UK government warned that a May target date to reopen non-essential foreign travel could slip. Samsung's first quarter profit gained 44% from the previous year, boosted by the early release of a new flagship smartphone and strong gadget sales. The world's largest maker of memory chips had warned about weaker demand, but insisted the economic rebound from the pandemic happened faster than expected, with semiconductor prices now rising. That's the Bloomberg Business Flash. Matt?
Laura, thank you very much. Laura right there with your Business Flash. Now, the UK will begin rolling out the Moderna vaccine later today. You may have heard us tell you at least 20 times in the last 2 hours. It's 2 weeks earlier than expected, and there's a lot of reason for optimism. As tests show, the shot provides coverage for at least 6 months. Now, there is some pessimism as well coming from, once again, AstraZeneca, concern about a shortfall in doses and also a problem, or a stoppage, I should say, not a problem, with a trial on children. Now, in terms of Moderna, new data shows antibodies from the shot last up to 6 months, as I was saying. And the co-founder, Nubar Afayan, told Bloomberg it's also effective against a range of variants. Listen to this interview.
It is good news that we've begun to see some good evidence of antibody protection lasting at least 6 months. That's as long as we've had to test it. And we expect that we will get more and more data, both from that earlier study and from the larger studies that we did later in 2020. So lots more to come on that, but that's encouraging. And as for the variants, I mean, look, our immune system is trained to detect many hundreds of threats on a daily basis. And variants are going to look like slightly different threats. And in some cases, they've shown that they can evade the immune response partially. But what we've shown so far is that some of the immune system continues to attack the variants, and we're going to have to keep a close eye on which variants are beginning to exist. And as you know, we've also started developing, just in case we need them, additional mRNA vaccines that will target some of these variants. So whether it's a variant vaccine or the original vaccine or some combinations of these, we want to be 1 or 2 steps ahead of the virus as it manifests changes, to fight back against our immune systems.
Now, Moderna has been testing the vaccine on children ages 6 months to 12 years. My children are in that age group. What do you know so far, and when do you think the soonest is that kids in that age group will be vaccinated?
Well, you know, these trials are done in a very prescribed way, and so we don't get early information. When we get the information is when we generally disclose it to the public, as we did in the main human trials that we did last year, phase 1, phase 2, and phase 3. And so this will be the same. It's going to go through rigorous testing. So I don't want to give a sense of when that might be concluded, but suffice it to say that we've said when we first entered into this that over the coming months, we expect to begin to gather data and share them to the public as to whether we see differences and the efficacy, safety. I should say that in the younger population, we're also testing some lower doses because we expect that perhaps some of those will be as efficacious, and we'd like to make sure we get the right dose. And so, you know, more to come on that, but over the coming months, I think is a reasonable expectation. I can't be more specific than that.
Interesting. Okay. Now, it's hard to believe that Moderna was just a startup a few years ago that you started building in-house at Flagship, your venture capital firm that's focused on biotechnology. You've also got another company, Kaleido, that's been working on an oral treatment to fight COVID that's also seen some promising results. How confident are you that if you don't get vaccinated or even if you do and you get a serious case of COVID, that a drug will be able to save you?
Look, I think that everything we can do based on biomedical research to delay, deter, attack this virus, we need to do. And what you're seeing is this industry that's largely been out of the mainstream, let's say, conscience of the world, which is the biotech industry, is suddenly kind of being called into action to provide any and all means to beat back this virus. So certainly Kaleido, another one of our companies, there's yet another one called Avelo that showed some very interesting data in their treatments. So I think that there's going to be many different treatments. We need to let the science dictate our decision making. We need evidence in controlled trials. And as we get that, I definitely believe that the arsenal of approaches to beat back this virus, even if it does infect people, will grow very rapidly.
Moderna's co-founder, Noubar Afeyan there, speaking to our own Emily Chang. Now, we continue to get European PMIs out. We have just gotten French PMIs out as well, and we see the services PMI in March at 48.2. The preliminary number was 47.8. So remember, these are just confirmations of the preliminary numbers that we've seen. You see a little bit of volatility there in the euro dollar, but nothing really to be terribly concerned about. We'll continue to see these numbers. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Be
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Not seeing any kind of a systemic debt crisis. We have a world that's recovering strongly.
There's a lot of good news, but there's also some bad news. New variants of the virus are spreading and they're moving quickly.
We want to be 1 or 2 steps ahead of the virus as it manifests changes to fight back against our immune systems.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition on this Wednesday, the 7th of April. I'm Francine Lacqua here in London. Now, here's what's coming up on today's program. Bruno Le Maire exclusive, the French finance minister, one of the driving forces behind the EU's pandemic bailout, and his country's digital tax joins the program shortly. Credit Suisse says, sees its bill keep rising for the Archegos blowout. JP Morgan says costs could rise above $8 billion as Bloomberg learns that Morgan Stanley narrowly dodged the chaos. And as global stocks hover at an all-time high, billionaire investor Mike Novogratz says Bitcoin is a new value store. How one of the biggest bulls in trading, cryptos ascend. Well, Credit Suisse is under pressure this morning. The bank yesterday detailed a staggering hit, $4.7 billion tied to the collapse of Archegos Capital. Despite cutting executives and dividends, the fallout is still being tallied. Well, joining us to discuss all of this is Bloomberg's Danny Berger. Danny, it seems like they really just can't catch a break at the moment.
Yeah, it really does seem that way. And look, we knew the $4.7 billion hit. Obviously, it's massive. It's just from one client. It's just in prime brokerages. And JP Morgan estimates that their prime brokerage service in general each year just brings in about $1 billion itself. But the issue is that the costs do go further than just that amount. For example, that figure you mentioned from JP Morgan, about $4 billion more dollars are going to be in costing Credit Suisse when it comes to things like more increased scrutiny from regulators, for litigation reserves as well when it comes to things like Greensill. They also have to deal with potential fallouts in relationships. Bloomberg sources tell us that Credit Suisse might be looking at making their clients take the hit from Greensill. They have been looking at giving some of that money back that they may have lost. And we've also learned that the Qatari royal family, for example, was invested in this. So these are really fragile relationships that Credit Suisse also needs to worry about, Francine.
Danny, thank you so much. Danny Berger there with the very latest on Credit Suisse. Now to our exclusive interview. And the IMF has upgraded its global growth forecast with the world economy on course for its fastest growth in more than half a century. But while the U.S. injects trillions of dollars of stimulus and China implements strict preventative measures to prevent further outbreaks, there's a danger that Europe is going to be left behind. Now, France has begun its third national lockdown this week amid a new wave of coronavirus cases. For 4 weeks, the EU's second largest economy will close schools, non-essential shops, and introduce curfew. Now, the outbreak has also prompted the finance ministry to downgrade its growth forecast for the year to between 5 and 6%. Well, we're delighted now to be speaking to Bruno Le Maire. He's a French finance minister. He's now held that position for almost 4 years and played really an instrumental role in pushing forward the EU's 500 billion euro emergency pandemic deal. So, Minister, thank you so much for joining us here on Bloomberg. Minister, when you look at some of the things that we should worry about, of course, it's vaccination rollout, and you've had to downgrade your forecast expectations. Is there a danger that you'll have to do it again if there's another delay in the rollout of the vaccine? Does it just postpone actually the recovery, or does it change course?
No, I think that we should have a very strong rebound in 2021. Of course, I've been obliged to revise our growth forecast from 6% to 5% because we have decided with President Macron to introduce new health restrictions due to the COVID. So we have decided the closure of 150,000 businesses. We have also decided the closures of schools and nurseries. And of course, these decisions that are necessary decisions will have an impact on the level of growth. But once again, I'm really very confident about the quick rebound that we will have after the health crisis. We are accelerating the vaccination of the French people, and I really hope that by the next summer, we will have the first impact of our decisions on the National Recovery Plan with, once again, a quick and very firm rebound of the French economy. So I'm totally confident.
But, Minister, so when exactly are you expecting a recovery? First of all, when are you expecting France to reach herd immunity? And is there a rip-roaring recovery as soon as you reach that point?
You know, when you are looking back at year 2020, when we have decided to lift the health restrictions in summer 2020, we have registered the most important rebound among the economies of the Eurozone, 18%. So that's why I'm so confident. When you are looking at the French economy, you have a strong economy. We are investing with the National Recovery Plan on key sectors. We are improving the competitiveness of the French industry. We are investing on innovation and technologies. And as the health restrictions will be lifted, and I hope that it should be the case before next summer, you will have this very quick rebound of the French economy.
But, Minister, in terms of timeline, so first of all, what did you learn from the vaccination experience in the UK? And given that the UK and the US are ahead in the vaccination process, does it just delay the recovery by a couple of months, basically by the couple of months that it takes you longer to vaccinate people? Or does it change the way that we should look at the recovery in France?
You know, we don't want to have a new look at the French recovery or the European recovery. I think that the key point is the long-term approach. We will have, once again, a very important recovery in France, and I hope also everywhere in Europe by 2021, 2022. And we should, in 2022, have the same level of economic development as the one we had in 2019. But the key point is on the long term. What will be the European economy after the crisis? This is the key point. If we want to have a strong economy, able to face the challenges of China and the United States, able to remain in the technological race, we need to invest, and to invest right now. That's why, to me, the key point is to have a quick European recovery and to have the European recovery plan being implemented as soon as possible. And this is the key issue. Vaccination is on the right way. The French National Recovery Plan is on the right way. We have already disbursed 29 billion euros of the French National Recovery Plan, where the total amount is 100 billion euros, which is clearly the evidence that we are on the right track. But the point which is not on the right track is the European Recovery Plan. We have not seen one single penny among the 750 billion euros that have been decided last summer in 2020. I'm deeply concerned by the delay in the implementation of the European Recovery Plan. That's the key point.
Right. So, Minister, what happens if actually we don't see a penny of that recovery fund because of various holdups, including the German Constitutional Court? If we don't see anything before the second half of 2021, what does that do to the recovery?
I don't want to blame anybody, and I'm not here to blame any member state. I just want to recall the facts. The first fact is that we have decided the European Recovery Plan last summer. In July last year, in 2020, we had decided to raise common debt, and this common debt issuance was clearly a breakthrough in the European history. Then we have adopted the European Recovery Plan with the 750 billion euros on the table. It was last summer, 2020. We are in April 2021, and once again, I have not seen any single penny, and the decisions on the own resources have not been ratified by the 27 member states. So I just want to urge all the European member states to come back to the spirit of 2020 and to reignite the impulse that we had been able to give to the economic recovery in 2020. Let's come back to this spirit of solidarity, of determination, of willingness to have a quick economic recovery everywhere in Europe. What it has taken is absolutely decisive for the future of Europe in the 21st century.
But given what you've just said and what we're seeing in the US with the infrastructure plan, with the recovery plan, does Europe need to be more ambitious? Is Europe lacking in ambition right now? Do we need to go bigger? I know we don't even have the recovery fund, at the moment, but do we need more stimulus in Europe?
So there is not a lack of ambition. There is a lack of effectiveness. It's totally useless to put more money on the table and to make big announcements about 1,000, 2,000 billion euros if you are not able to deliver and to disburse the funds. The key point now is not to make big announcements, is to have a quick disbursement of the decisions already taken. That's the key point. And I just want to recall everything that we had been able to do all together in 2020. We had been able to face the crisis by introducing new reforms and new decisions to support our economy, our private companies, or salaries. And I think that we should be proud, we European countries, on the decisions that we had taken in 2020 to protect our economies. We had been able also to take very strong decisions on the industrial policy. We have been able in less than 2 years to introduce new value chains on electric car batteries, on quantum calculation, on artificial intelligence, on cloud, on hydrogen. These are major successes for Europe. But now it's time to come back to this spirit and to have, once again, a quick disbursement of the European Recovery Plan.
But do you worry that there's, overall there's not even enough stimulus? And you're right, nothing has been dispersed yet. And you're also trapped in a situation where the US is spending, inflation is going up, treasury yields are going up, putting extra pressure on Europe. And is there anything that Europe can do about that now, about market movements?
I think that the US recovery plan is good news for the European countries. And I think that we should not be afraid by the fact that there is a strong stimulus plan in the US. I'm not concerned about the risk of having more inflation. I think that the key point now is to have an important economic recovery in the US. This is good news for European countries. This is good news for the European economy. So let's take all the benefits that we can take from this stimulus plan in the US, which should feed the growth for all European countries. But let's do also our home job by having a very strong stimulus also in Europe. And once again, the key point is not the level of ambition of the stimulus plan in Europe, because I think that we have the right level of ambition with these 750 billion euros. You could add also the national recovery plans to these 750 billion euros. The key point is the quick implementation of that plan.
Minister, I have many questions, so maybe one on taxes, and then we'll go back to some of the more French questions. When you look at the proposal by Janet Yellen over the weekend about a minimum corporate tax, how does that fit with France's ambitions to actually also get tech giants to pay more? Can the two match up? Are there discussions ongoing between France and the US to find a global solution?
I hope so. I hope that it can match. You know that I've been personally advocating for a total overhaul of the international taxation system as soon as possible. I've been always advocating for a global solution in the framework of the OECD, based on the two pillars, pillar one, minimum taxation, pillar two, digital taxation. I think that we are not far from an agreement within the OECD. And I really want to say how important the decisions and the statements made by Janet Yellen are for all of us, because there is a unique window of opportunity to have a new international taxation system which would be more efficient and fairer, based once again on the two pillars, digital taxation and minimum taxation. I want also to be very clear, this is a very important challenge, and David is in the details. So we need to have a look at the concrete proposals made by Janet on the digital taxation, the necessity of having an effective taxation of the most important private companies in the world based on digital profits. We are having very in-depth discussions at the technical level between the French administration and the American administration on this matter. But I think that we should all do our best efforts to reach an agreement by next summer.
Bruno Le Maire, thank you so much. The French finance minister stays with us. We'll talk a lot more about some of the loans, of course, that the UK has also, that France has also dispersed to some of the companies if they're worried about defaults, and we'll talk about Air France. Coming up, we'll also go back to what Minister Le Maire was saying about Janet Yellen introducing the idea of a minimum global corporation tax. They can enforce it, but can they enforce it actually without also considering a cross-border digital tax? So we'll have plenty more, of course, with the minister on that as well. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the US, we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacroix here in London. Now we're back with Bruno Le Maire, the French finance minister, and we're talking about taxation minister. We were talking also about the recovery and some of the EU fiscal spending. Minister, thank you so much for sticking with us. I'd like to go back to what we were talking about in taxation, and it's all about after the U.S. proposal to try and find, I guess, a global agreement. I know the OECD was honing in to, towards a 12.5% taxation. The Biden administration, we understand, more of the 21% corporate taxation globally. Where's France on it?
We have been proposing, as you just recall, 12.5% for the minimum taxation on corporate tax, but of course, we are open to any increase on that figure, because we think that the question of minimum taxation is absolutely vital for the sake of efficiency and fairness in the international taxation. So we are discussing with Janet Yellen and at the technical level, the right level of minimum taxation for corporate tax. But once again, I'm open to an increase on the level of minimum taxation. We have proposed 12.5%. An increase is a possibility.
An increase matching what the US would want?
We are talking with the US. We have in-depth talks with Janet Yellen and with the Treasury on the right level of minimum taxation. But since the challenges are so important, we stand ready once again to an increase in that level of minimum taxation.
Minister, the state has guaranteed more than 130 billion of loans during the crisis. How much of those are you expecting to default?
I think that, first of all, we should recall that the level of default has been very limited in 2020, and we are doing our best efforts to avoid to have more bankruptcies in 2021 than the ones we had in 2020. We are not expecting a massive amount of default of these loans, and I think that we have many possibilities to avoid defaults on these loans. The other challenge, which is absolutely vital for the French economy, of course, is to develop quasi-equity loans for a level of 20 billion euros for helping the private companies to invest, to create more jobs, and to be able to fund innovation. That's one of the major tools that we have decided to introduce with President Macron to support the private companies and to help them investing for the future and creating new jobs.
Minister, we had news, of course, on Air France yesterday. Is this the final bailout of Air France by the French government?
I would not say that this is the case. I hope it can be the case. But, you know, when you are looking at the aeronautics sector in Europe, this sector is facing the most important economic crisis for many decades. So we have to be aware that there is a need for support. We have decided to provide more support to Air France after a very long and tough negotiation with the Commission. And I think that we have found a right agreement and a balanced agreement with the European Commission and with Margrethe Vestager. This decision has been taken for strategic reasons. We are deeply convinced that Air France is a major and strategic company for France. We will see what the situation will be on the aeronautics sector over the next month. But I would not say that this is the last support that we are giving to Air France. We are all aware that the difficulties that the aeronautics sector is facing are absolutely structural.
Minister, talk to me about EDF as well, Électricité de France. Are you confident that France and the Commission will find a way actually to reform EDF, or is it going to be difficult?
First of all, we have to recall the sense of the proposal that we are discussing with the unions. The idea is to provide a possibility for Électricité de France, EDF, to invest more in the renewable energies, to be more competitive, and to keep the possibility of investing on nuclear energy. This is the framework of the global reform that we are working on. Of course, we are having discussions with the Commission on the parameters of this reform. We are also having discussions with the unions. I hope that we will find a common ground to move on, because the idea is to reinforce EDF and to help EDF to face the challenges of the 21st century in energy. And the key challenge, of course, is to be able to develop renewable energies as soon as possible.
But, Minister, is it true that you've had discussions with union leaders and said that the French state would be willing to spend 10 billion to buy out some minorities? And actually, under what circumstances would that be done?
It is clearly too soon to give any figure because we don't know the exact details of the reforms. We are discussing the details with the Commission and with the unions. So before having a clear view on the parameters of the reform, it would be totally useless to give any kind of figure. I can't give you any kind of figure which would be credible since we do not have the details of the reform. We are discussing the details of the reform with the unions and with the Commission. Because if we want this reform to be successful, of course, we need the support of the unions or part of the unions. We need to convince them of the credibility and the efficiency of this reform. So I will not give any kind of figure because it's clearly too soon to do it.
So you can't confirm the 10 billion yet? Is it the type of discussions?
I will confirm the figures once we will have the details of the reform. But, you know, it's not a take it or leave it reform. It's a reform we are discussing with the unions, discussing with the Commission, with the ambition of finding clear reinforcement of EDF, this strategic company for France. But before having the details of the reforms, it would be once again a lack of credibility to give any kind of figure.
Minister, thank you so much for your time. I know you've been very generous, as always, with a comprehensive interview there. Bruno Le Maire, the French finance minister. Now, coming up, Amazon chief executive Jeff Bezos supports a corporate tax hike, but stops short of supporting the president's proposal. We'll have the latest on that next. We'll also have a full roundup of market news, including Morgan Stanley, supposedly, according to Bloomberg sources, selling off some of the shares that then led to the Archegos blow-up. This is Bloomberg.
Tell us something you're doing that doesn't work out, where you've failed or something you can say you're not good at.
Let me tell you something. There is plenty that I am not good at and plenty that I've failed at, but I'm not afraid to fail.
Chang explores how a chip shortage snarled everything from phones to cars on a Bloomberg television special, Chip Crunch, Wednesday on Bloomberg Technology.
Bruno Le Maire exclusive. The French finance minister tells this program that he's deeply concerned about the delays in the European recovery plan. He is also open to a global minimum corporate tax after Janet Yellen's proposal. Credit Suisse sees its bill keep rising for the Archegos blowout. JP Morgan says costs could rise above $8 billion as Bloomberg learns that Morgan Stanley narrowly dodged the chaos. And as global stocks hover at an all-time high, while billionaire investor Mike Novogratz says Bitcoin is a new value store, how one of the biggest bulls in trading is trading crypto's ascent. Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance, the early edition on this Wednesday, the 7th of April. Now let's get straight to the Bloomberg First Word News. Here in London with me is Leanne Gerrans. Hi, Leanne.
Hi, Francine. A trial of AstraZeneca's vaccine in children has been paused while the UK's drug regulator investigates rare cases of blood clots in adults. Meanwhile, Moderna is to be rolled out as the UK's third vaccine option. That's starting from today, 2 weeks earlier than expected. This comes as a new study finds antibodies from the vaccine remain active for at least 6 months. Now, Indonesia's president is backing a push to expand the mandate of the country's central bank to include support for the economy. In an exclusive interview, Joko Widodo told Bloomberg Bank Indonesia shouldn't just manage the currency, but should also support sustainable economic growth and job creation.
Ya sebelumnya kan.
Before, rates were at very high levels, 8%, 7%. Now at 3.5%, so we're very happy. People are happy, the business world is happy, and the most important thing is how we can improve demand, improve consumption, improve exports. We saw that at the end of March. Our Purchasing Managers Index was at a better position from before the pandemic, at 53.2. Before the pandemic, it was just 51. Now at 53.2, so we are optimistic that if we can subdue the pandemic, we continue with the vaccination program, the economy will recover.
President Joe Biden says all Americans over the age of 18 will be eligible for a coronavirus vaccine by April the 19th, 2 weeks earlier than the previous goal. He also warned that while there's been progress against the pandemic, new variants are spreading quickly. Separately, the White House has ruled out so-called vaccine passports, citing concerns over privacy. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, over an hour into the trading day here in Europe, so let's take a look at some of the biggest movers. Joining us is Danny Berger. Danny, what do you have?
Well, Francine, I did want to start with just the mid-cap UK stocks. They're up 0.8%, but this means if they close at this level, they will be closing at an all-time record. We saw European stocks in general close at a record. Probably this has to do with just the weak pound because UK stocks in general are doing that. We also got PMI numbers for the UK as well. But still, sticking with the region, Deliveroo, this is the first day of trading for retail investors in the Delivery food app. You remember had that really, really bad debut, sinking more than 20%. Well, it's up 3%. So even though retail can trade again, we're not seeing those selling pressures. Finally, Flutter Entertainment, there's a lawsuit going on with Fox, who has an option to buy FanDuel. FanDuel owned by Flutter, but Fox is opening up a suit over the valuations it wants to pay that Flutter doesn't agree with. Quickly, let me give you a check also on some of your U.S. pre-market movers. We're looking at a lot of cruise line stocks set to open higher today. Carnival, it is trading higher in the UK session as well. Of course, I have the US listed one here. CDC saying that they're likely to get cruises up and running by midsummer. There had been a bit of a row over the likes of Carnival threatening to move offshore away from the US if they aren't able to get some of the restrictions taken away. So that's positive news for the industry. Finally, Beyond Meat, more production, says it's going to open up a plant in China, also plans to open up a plant in Europe as well. So more fake meat for everyone, Francine.
There you go, fake meat. Danny, thank you so much. Danny Berger there with some of the pre-market moves. Now, Amazon chief executive Jeff Bezos says he supports a corporate tax hike to fund investments in U.S. infrastructure. Now, such investments would help the economy efficiently move goods around the country, but he also stopped short of endorsing Biden's proposal. Technology companies like Amazon will likely pay more under the president's plan. Jim Milstein, Guggenheim Securities co-chair, told Bloomberg that he thinks the effective tax rate should be...
If corporate profits are $2.5 trillion, give or take, should 20% of that be coming into the federal coffers to pay for all of the things we do for economic growth and business development, from education to infrastructure? Yeah, I think so.
Well, joining us now is Stephanie Kelly, Aberdeen Standard Investment Senior Political Economist. Stephanie, thank you so much for joining us. When you look at exactly what we heard from the U.S., how ambitious is this plan on a corporate level, or is this just trying to rally the allies, as it were, to make sure that, everybody knows it's not America first anymore?
Well, I think this is one of the kind of challenges with this is obviously it's great to see chief executives coming out in support of this kind of package. But at the same time, it's support, but I think a contingent support. And in particular, it's always worth bearing in mind the effective tax rate that corporates pay can be quite different to what the actual level is, just because of the way the tax systems are built. But I think overall, for the package, it's pretty clear the way the politics are running on this, that they're going to need to find ways to fund that infrastructure spending that everyone seems pretty in agreement that it's a good thing. The question mark just comes at where do you tax and how do you tax to make it happen?
Yeah, so Stephanie, how quickly could we see something like this? I mean, first of all, there's the OECD plan, then there's the digital taxation, which is different, the minimum corporate taxation. And we were just having a conversation also with the French finance minister. Where will we actually end up? And is it in 12 months? Is it in 24 months? Is it a long way off?
Well, this is the kind of interesting one, hey, because so embedded in the infrastructure plan that Biden has proposed, which Pelosi is saying she wants to get done by July 4th, there is a kind of a hike in this sort of minimum tax, right, which is consistent and kind of not dissimilar to what's being discussed at the OECD level around a global minimum tax. So I think this is where the kind of confusion comes. It looks as though they're going to push ahead within the US in terms of having this sort of tax on international kind of behavior, but at the same time, I think there's a lot of political capital in Washington now behind making the OECD kind of global approach work. To your point, though, these things can take time, and it's not entirely clear. I don't know when exactly the next meeting will take place, but Yellen's obviously been very clear that she's working with global leaders. She wants to make this happen, and that would be really consistent with what they're trying to do domestically as well.
Stephanie, overall, where do you see the infrastructure actually ending up? Are we going to end up with 2.2, 2.5? Can it be significantly higher? And how different will it look like at the end of the day?
So the interesting thing about this is we don't just have the infrastructure bill, right? We know that there's another quote unquote human infrastructure bill coming, which is, linked but separate. Obviously, it's slightly easier to pass things in chunks rather than in one giant bill. The estimates I've seen suggest it could be the two together could be to the tune of about $3 to $4 trillion. And I think the way that politics are playing in DC at the moment, it's not necessarily that moderates like Joe Manchin, who we always hear about, take issue with a large bill. They take issue with increasing the deficit substantially. And that's why the tax stuff matters so much, because to make this pass politically, to get that $3 to $4 trillion, you are talking about something that involves quite a lot of changes to the tax system. At the moment, the first one, if we take just this infrastructure bill as it stands, I see little reason for it to get a lot smaller. I think it probably ends up looking similar. Obviously, the sausage factory that is Washington, D.C. means it might look a little different. But I think in terms of general size, there's not a huge amount of downward pressure. It's just a question of how you pay for it.
Stephanie, the markets definitely worry about, how you pay for it, but also whether there's too much inflation, right? Whether you're overstimulating the economy. Is there confidence in the Biden administration, but also the Fed, that actually it's better to have it that way than the reverse, that it's always better to try and temper if inflation is out of control or if growth is, suddenly picks up too much, that they can deal with that and not the other way around?
Yeah, I think generally speaking, we're not overly worried about inflation. I don't get the impression that that's a huge source of concern in DC either. I think also for a bill like this, it's worth bearing in mind that it will take time to kind of come through. So it's not the case that it's kind of a big spending bill like we saw with the COVID stimulus, where it's all at once. Instead, it's something that would actually really gradually pay out over time, just because, think about, you want to build a new road, you have to then go through all the planning process, you have to put out contracts to tender, there have to be people available to work to do it. So it takes time, and I think that will temper the kind of immediacy of the impact of this. Because it is something that it's a 10-year plan, right? Funded over 15. So it's kind of a different timeline than we've seen with the COVID support bills, which were much more around providing that, life support for the economy in the here and now. This is much more longer term.
Stephanie, what do you make of the nuclear talks with Iran? So it seems that it's going in the right direction, and the White House seems to be suggesting that, but actually very big gaps remain.
Yeah, and I think that's probably what should be expected, right? These aren't even technically direct talks, they're indirect talks being facilitated by Europe. So I think it's the beginning of a positive step for the JCPOA, being kind of, for the US kind of rejoining the JCPOA and it kind of being fully conforming again. I think you've obviously seen a huge amount of animosity between Iran and the US in the last couple of years after the Trump administration's decision to kind of exit. But we are at the beginning of probably what is a decent amount of back and forth, indirect talks first. I mean, what you'd be looking for is more direct discussions, so foreign ministers, even leaders. That will be a hugely positive signal. But it seems as though, they always say in foreign policy, talking's better than not talking, and then they're starting to talk.
Stephanie, thank you so much. Stephanie Kelly, there, Aberdeen Standard Investment senior political economist. Now, coming up, investor Mike Novogratz says Bitcoin is a new value store, how one of the biggest bulls is trading crypto's ascent. Our interview is next, and this is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, NFT is the latest buzzword in the blockchain boom. The Galaxy Digital founder and chief executive Mike Novogratz says we're only in the early days of the crypto art craze. Now, the billionaire investor told Bloomberg that global wealth in cryptocurrencies will just keep growing.
What's the S&P on the year? Up small, and Bitcoin is up 100%. And this week, Ethereum, which is the second largest cryptocurrency, had a monster move. And so what you're seeing is money continue to pour into the space. We just went over $2 trillion of wealth, market cap in crypto. And so that's a pretty significant number, right? You think about it, there's 130 $140 trillion of U.S. wealth, $400 trillion of global wealth. So we're now up to half a percent of global wealth is in crypto, and that's growing. I think it'll be 1% by the end of the year.
We've seen a lot of usage in digital art, but where do you see this going? What else can this actually be used for?
NFTs are going to be with us for the rest of our lives, right? Art on the blockchain, collectibles on the blockchain, IP on the blockchain. It's all happening, and we're in the very, very early stages. So much that there's little mini bubbles that'll pop up and down, but don't miss the big picture. This is fundamentally going to change how we secure intellectual property from now going forward.
So am I right to make the distinction that this isn't necessarily a Bitcoin boom, this is a crypto, an Ethereum, a blockchain boom as well that you're following?
100%. Listen, you know, Galaxy Digital was set up to participate in the whole ecosystem. We've made investments in over 100 companies in and around the space, from DeFi companies to protocols to security companies to custody companies and to DeFi companies. I'm sorry, to NFT companies.
Talk a little bit more about how it's now not only starting to appeal to corporations, but there's been a lot of talk now of how governments could actually start getting involved in this. What happens if that happens? Because I keep hearing it sort of pitched as a good thing, and I'm not quite sure I understand how.
Well, listen, there's a bunch of different lanes in crypto. So Bitcoin has carved out this lane of store of value, of digital gold. And so most governments don't care if people are putting their money in gold. Listen, if they do a horrific job managing their finances, more people are going to want to take their money out of that country and put it somewhere else that's safe. Right now, Bitcoin is being seen in the digital world as that place. I don't think Bitcoin is going to be what we use to buy shoes or, you know, sunglasses or Diet Cokes, right? You're going to see a war in payments where stable coins, central bank issued digital currency, stable coins vie for that space.
That was Mike Novogratz, a Galaxy Digital founder and chief executive, talking about cryptos as part of what he calls a blockchain boom. Now, Credit Suisse is under mounting pressure. The bank yesterday detailed a staggering hit, $4.7 billion tied to the collapse of Archegos Capital. Now, despite cutting executives and dividends, the fallout is still being tallied. Well, joining us to discuss all of this is Bloomberg's Danny Berger. Danny, you've been, of course, all over the story from the very beginning. At this point, what's next for Credit Suisse?
Francine, it's really all about mitigating costs and making sure relationships are safe. On the cost front, we have to remember it's not just Archegos, it's also Greensill as well. Now, the bulk of the charges probably will come from Archegos, considering that $4.7 billion they outlined yesterday. But JP Morgan, for example, says, look, the cost for both of these crises is going to be something more like $8.7 billion. That's because you have litigation provisions, for example. You also have charges from regulatory scrutiny. Now, on the relationship side, Credit Suisse right now seems to be battling with whether they let investors take more of the hit on Greensill or whether they absorb some of those losses themselves. Now, at stake here are relationships with the Qatari royal family, for example, which Bloomberg has learned was an investor in this Greensill fund. So it's a very fine line that they're going to have to walk at this point.
Danny, the rest of the banking industry seems to be headed for a good year, though. So why is Credit Suisse such an anomaly, or is it just the anomaly?
Well, look, at this point, banks that have had really substantial damage from Bill Hwang's family office, it really is just Credit Suisse, and Nomura, it does seem, is going to have $2 billion or so losses tied to this incident, but everyone else, their losses don't seem to exceed that. For example, we just learned overnight that Morgan Stanley was able to sell pretty early on about a $5 billion block trade before we saw that Friday big block trading from Goldman Sachs during market hours. So if you got out early, you were able to avoid this. But it's not just that, it's also that it is a good period for banks. We have more volatile markets, we have more deal making, and this is when banks really are increasing dividends or looking at bringing buybacks back. At the same time, Credit Suisse is pausing them. They're slashing their dividends, and you can see that reflected in the share price, that Credit Suisse is really the only major bank to have fallen year to date, Francine.
Danny, thank you so much. Our Danny Berger there looking at the Credit Suisse story and, of course, the fallout from Archegos and other banks. Now, coming up, it could be the largest PE-led buyout in years. Toshiba says it's received an initial offer from CVC Capital. So we'll give you all of the details next. This is Bloomberg. Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing out at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim. We're going to be riveted to that, and we're going to do what is required.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Philanthropy can also often take risks. They can try innovations that sometimes work and sometimes fail. They can look for new solutions. They can help us collect the data. But ultimately, it's always up to government to scale up these innovations to create this change. The vaccine for COVID is a perfect example. Those are pharmaceutical companies working with philanthropists and investors, but working with the government. Ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries.
Well, that was Melinda Gates discussing COVID-19 and the role of governments in the race for vaccines. Now, don't miss the latest episode of Bloomberg Studio 1.0, where the Bill and Melinda Gates Foundation co-chair explains how philanthropy's effectiveness sometimes actually hinges on its connection to government. Now, in corporate news, Toshiba says it's carefully considering a buyout offer from CVC Capital Partners. The deal could be worth more than $20 billion. That's according to Nikkei. It would be the largest private equity-led acquisition in years, while Toshiba shares surged to their daily limit of 18%. Joining us now with the latest on the story is Manuel Baigori. He's our deals reporter in Hong Kong. Manuel, first of all, how big of a deal actually is this? I mean, we haven't seen a deal this size in these conditions for quite some time, if it goes through.
Exactly, Francine. If it goes through, it will be perhaps the largest ever buyout, and it's really large. I mean, it's such an emblematic company, Toshiba, which has struggled for years now amid declining business and profitability. You've got the two and two together, right? CVC, one of the largest buyout firms globally, with a lot of dry powder, a lot of capital to deploy, and you've got a shrinking yet very well-known business in Japan. So let's see. We'll see whether the board, which is meeting today as we speak, approves the offer. But if it were to go through, it would be definitely a huge deal.
So, Manuel, what exactly, we're kind of joking around because we have also quite a lot of millennials in the newsroom, and it's like, well, what does Toshiba do? They, used to do even air conditioning. How will this deal actually transform how Toshiba can sell to the rest of the world?
I think they could, the two firms have an existing relationship. Also bear in mind that the current CEO of Toshiba is a former senior CVC executive. So the two and two, can work together well. I think for Toshiba, the main, it's a conglomerate. They're present in various industries, from defense to energy, appliances, electronics, pretty much anything you can think of. And they've been very successful in the past. They've got a very respected brand. But it is true that they have been faced by increasing competition and also internally with a lot of shareholder pressure. So I think bringing in, a very respected investment fund such as CVC could perhaps take the company to the next level and maybe slice it out and sell some of their businesses, perhaps creating shareholder value, and also expand in those areas where they see more potential growth. Yet, we'll see whether or not, they face a lot of scrutiny because Toshiba is still present in very sensitive industries in Japan. So this potential deal may raise a lot of problems or hurdles. They may face a lot of hurdles from politicians and regulators to get it through. So a lot of questions to be answered yet.
Manuel, thanks so much. Manuel Baigori there, deals reporter in Hong Kong. Now, we'll have plenty more, of course, on that story. We'll go through Toshiba, Credit Suisse. We keep on looking at the fallout in Archegos. Meanwhile, if you look at markets, they're nearing record highs. Part of this is thanks to the optimism that we heard from the IMF. Part of it is just that politicians expect recovery to take hold maybe a little bit sooner than expected. Bloomberg Surveillance Early Edition continues in the next hour.
This patch of land in northwest Saudi Arabia is going to become Neom, a city powered entirely by renewable energy. The government hopes the site, which is the size of Belgium, will be a clean energy hub, not only for the kingdom, but also the world.
This here is at the borderline between Mission Impossible and Suicide Mission. Lucky enough, so far we've just been on the right side of the line, yeah. But you know, it's very close to that. You know, this is just smoking. This is nothing ever I've seen or heard of the dimension, the challenge. You know, I'm not talking energy only. You know, but in its broadest context, including the geopolitical dimension, including the cultural dimension.
Neom will include a $5 billion hydrogen plant run on wind and solar energy. All of the zero carbon fuel it produces will be shipped to international buyers in the form of ammonia. When it starts operating in 4 years' time, it will be one of the biggest hydrogen facilities in the world.
Can't explain Neom on the back of a set of PowerPoints and a video clip. You just need to be here. You need to, breathe it. And specifically the startup mode and, things happening. Buses all around you here.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We are not seeing any kind of a systemic debt crisis. We have a world that's recovering strongly.
There's a lot of good news, but there's also some bad news. New variants of the virus are spreading and they're moving quickly.
We want to be 1 or 2 steps ahead of the virus as it manifests changes to fight back against our immune systems.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Good morning from London, Berlin, and New York. Our top stories today. Gazing into a crystal ball, central bankers and finance chiefs try this week to figure out where the global economy is headed next. We'll hear exclusively from the French finance minister, Bruno Le Maire. Credit Suisse gets rocked. The after effects of the Archegos collapse may be long-lasting for the Swiss bank. And Toshiba soars. Shares of the Japanese conglomerate hit a 4-year high after a buyout proposal that could be worth more than $20 billion. Now, there's quite a lot going on in the markets. Kaylee, if you look at the markets, they're holding on to gains after the IMF also updated their growth forecast and went higher with those. What else are you seeing on the markets?
Well, we're hovering near record highs across the world, Francine. Of course, it wasn't broad-based strength in the Asian session. We did see Chinese and Hong Kong equities under a bit of pressure. The CSI 300 actually closed down by about 0.7%. The only major Asian index that actually was able to close in the green was the Nikkei. And I would point out, too, the strength we are seeing for Indian stocks today. The Sensex is up a full 1% at this point as the RBI is staying accommodative. Now, of course, one of the biggest movers in the Asian session was Toshiba. The Japanese stock surged by 18%. That is the limit, also the biggest move since all the way back in 2017. That on news that CVC Capital has offered a buyout of the company about $20 billion. And then, of course, I wanted to point out the yen gaining, the dollar now gaining a bit of strength back against the Japanese yen, but we are below 110, 109, the key next level to watch. In the European session, we aren't looking at very large moves. Of course, we had European stocks on the Stock 600 hit a record yesterday. Today, that index is basically unchanged, as are really stocks all across the continent. The DAX is unchanged, the CAC a little bit of outperformance in Paris, and UK stocks are the outperformer in the session today, up about 0.8% on the FTSE 100. They were helped out earlier, perhaps by a weaker pound, but we have seen some of those G10 currencies gaining strength back against the dollar. The euro now up by about 0.1% as we continue to see that global bond sell-off cooling down. We are seeing yields moving lower by 1 basis point on the 10-year German bond, now yielding negative 33 basis points. Here in the U.S., we fell off of our record highs yesterday, but futures are pointing just fractionally to a higher open. We're only up 3 points on S&P E-minis as the 10-year yield is now down at 1.64%. That is the lowest level in about 2 weeks. Traders may be unwinding some of those bets after what has been a furious sell-off. The dollar is actually now giving back its earlier strength. The dollar spot index is at 92.27, and gold futures pay attention to as well, down by about 0.25% at this point, Matt.
Yeah, very interesting to watch the 10-year yield come down to those levels after we saw not only the run up to, what was it, like 176, 177, but also so many forecasts, Kaylee, for 2.25% by year. And of course, we could still get there. A lot of things happening today may move that yield. Let's take a look at what should be on your calendar. We're expecting, first off, the annual letter from JP Morgan CEO Jamie Dimon. We will delve through every single sentence in it and bring you all the headlines. That's 10 a.m. Or at 10 a.m. Eastern, I should say, we will have a G20 finance ministers and central bankers meeting. It's a virtual meeting. There will be a press conference at 10 a.m. Eastern. That's New York time. So 4 p.m. here in Germany. An hour later, Bloomberg has an exclusive interview with IMF Managing Director Kristalina Georgieva. And then at 2 p.m. New York time, minutes of the March Federal Open Market Committee will be released, and that's a minutes that I think a lot of people are going to pay very close attention to, because there's been so much attention paid to yields, and especially real yields over the last few days, Francine. It'll be interesting to see if the Fed expects inflation to start coming in at much higher levels with the growth expectations we've seen raised at the IMF, and if they, well, I'm sure they still expect it to be transitory, but the question is, what will the data prove out? Fran?
Yeah, Matt, what I'm most looking forward to actually is that letter by Jamie Dimon. I usually take, it's about 25 pages. I don't know whether this year, because of the pandemic, it will be longer. But I know quite a lot of chief executives also that enjoy reading it, because usually it touches on different topics, and it just feels like you're reading like a short essay, right? It's like a short novel by Jamie Dimon.
Yeah, a long essay or a short novel. For sure, 25 pages, even in college, I found it very difficult. I hope he double spaces, you know, and uses a very large font. Now, yes, Credit Suisse is under mounting pressure. The bank yesterday detailed a staggering hit. We talked about it a lot, $4.7 billion tied to the collapse of Archegos Capital. But despite cutting executives and bonuses and dividends, the fallout is still being tallied. Joining us to discuss is Bloomberg's Danny Berger. So, Danny, what more are we expecting for Credit Suisse?
Well, Matt, look, the $4.7 billion, that does seem to be the bulk of the fallout, or perhaps the worst, but more costs certainly could mount. For example, JP Morgan estimates that $8.7 billion is the fallout, the cost they're going to see from not just Archegos, but also from Greensill. We have to remember they're dealing with two crises at this moment. So that's another $2 billion for setting aside litigation provisions, as well as any increased regulatory scrutiny. And Credit Suisse is in the middle of weighing whether it has its clients foot the cost of the Greensill fallout or whether it compensates them for some of that. We are set to get an update from Credit Suisse in the next few days, but certainly a fine and difficult line they're going to have to walk at this moment.
And of course, it's not just Credit Suisse in terms of equities that are involved in this story, Danny. There are a number of stocks that were subjected to those massive block trades, and we're seeing a lot of options activity in some of those stocks.
That's right. I think there was this idea that a lot of these stocks that were sold, of course, they were U.S. comms company, they were Chinese ADR, that they were sold off unjustly, that there's no fundamental reason. It was really just because of the unwind due to this margin call. Well, some of those options, specifically in VIP Shop and GSX, have taken off yesterday, trading at more than 100% of their normal volume. So that's call options. So we could see some of these stocks rally already. We're seeing pre-market some pretty strong price action from GSX. Vonda Research also points out a lot of retail traders actually jumping in and buying these stocks. So perhaps an interesting turn of fate moving from GameStop to Archegos Link stocks, Francine.
Danny, thank you so much. Danny Berger there, all over that story from the very beginning. Now, meanwhile, Toshiba surging to its daily limit after receiving a buyout offer from CVC Capital that could be worth over $20 billion. Well, joining us now from Tokyo is our Bloomberg technology reporter, Pavel Alpeyev. Pavel, it's a premium, so actually Toshiba could go for it, but it's the biggest, I think, buyout in recent memory if it goes through.
There's certainly a lot to look at here. At $20 billion, it's a premium, but with shares rising about 80% to 18% today, a lot of that gap has closed. So it could be probably a starting bid if there is an actual final bid. It certainly would be a seminal deal for Japan because there's a real lack of risk capital that targeted these large industrial Japanese companies, and there was a sense they were chronically overvalued. So any kind of PE success with CVC is likely to lead to more such inroads. There's already a few interesting wrinkles in the story. The CEO of Toshiba, Nobuyuki Kuromatani, he was previously headed CVC's Japan operations, which obviously is raising questions about the nature of this bid and the origin of it. It also helps him quite a bit because he's been under fire from activist shareholders and having his former bosses bid the shares of Toshiba up is certainly helping him out. So lots of questions there. But at the end of the day, you know, the question is around not just the price, but also whether Toshiba sees its future as a private company. I mean, they've been they were nearly delisted in the wake of an accounting scandal a few years back, and they fought tooth and nail to get back to the Tokyo Stock Exchange Section 1, and were fairly handsomely rewarded by shareholders. Not to mention the various intangible benefits of being a public company in Japan that affects everything from financing to hiring graduates. So the question is really whether the management and the investors really see the future of the company as a private entity to be the best one.
Pavel, thanks so much. Pavel Alpeyev there in Tokyo covering that story for us. And Matt, certainly it did have a colorful past. And then, of course, one of the other stories we're trying to figure out in the newsroom, we have a lot of millennials in the newsroom, about whether anyone remembers hi-fis or stereos or even, you know, some of the things that Toshiba makes, like televisions. Many didn't, but it does also have an arm because it's such a big conglomerate into sensitive industries. And then we'll see whether the Japanese government will actually be willing to sell that off to a foreign entity.
Yeah, back in the 80s when you and I were wearing Vans to go see Fast Times at Ridgemont High, they were making, you know, music devices that used cassettes, and a lot of the kids in the newsroom probably have never used a cassette before. So, and now they had a foray into nuclear power, which didn't end up well. You know, the shares, though, jumping to a level that we haven't seen since 2016, but back in the 80s, they were worth 3 times as much. So no inflation for Toshiba shareholders.
Yeah, man, I have to say one of the biggest joys actually
company,
growing up was making cassettes for your friends, Kaylee, something that you probably have never known. But you know, Vans are still in vogue.
Yeah, Vans have come back around. I do own a pair of Vans, or I used to. Have I ever owned a Toshiba product? I think I am one of those guilty millennials that honestly has no idea what that even looks like. But as for some stocks that are moving in pre-market trading, I do want to take a quick check on some of the cruise lines, because there has been this battle going on between these cruise line companies and the CDC about when they can sail again. Carnival threatened to pull its ships out of the U.S., and as a result, the CDC caved into pressure last night, said cruises can resume by midsummer. That has cruise line stocks like Norwegian up 3% in pre-market trading, Carnival and Royal Caribbean up about 2% and 1.5% respectively. And then I also wanted to point out another leisure entertainment activity, online sports betting. Action here in New York set to approve Governor Cuomo's outline for online sports betting. That is lifting DraftKings by 3.4% in early hours, Francine.
Kaylee, thank you. Now, coming up, markets hovering around records as investors await Fed minutes. We'll be speaking to Max Kettner, HSBC Multi-Asset Strategy. And then later on, the French Finance Minister Bruno Le Maire also says he's deeply concerned about the delay in the European recovery plan. So we'll have more from our exclusive interview with the French Finance Minister. This is Bloomberg.
Good morning, traders. If you're looking for new trade, we're going to place an order to buy Japanese yen. The price I'm looking to buy is 109,830. Okay. I'm going to place an order. Oops, it jumped. No, I wasn't able to buy, sorry. I'll have to wait until it will reach necessary level. So at this moment, as you can see, I wanted to buy at 109,830, but it jumped down to 109,825. So let's wait and see what's going to happen with Japanese yen.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Now, European stocks rose to yet another all-time record and are hovering right around that level. It's interesting to look at earnings expectations as more analysts raise expectations than they have they raise expectations to a higher level than they have in 11 years. I've got a chart of this that Hillary threw together for me. Profit upgrades are outpacing cuts by the most since 2010. And this just shows the strength of the earnings rebound that is expected. Now, the question is, can stocks continue to run higher from here, or have valuations already priced this in? Francine?
Yeah, the million-dollar question, trillion-dollar question. So joining us now is Max Kettner, multi-asset strategist at HSBC. Max, always great to have you on the program. Matt had a great chart. What exactly is priced in at the moment when you look at stocks?
Yeah, I think it's actually quite okay, right? So valuations, yes, they seem stretched, but Matt was just showing it. Earnings upgrades highest since 2010. When we look actually not only from a bottom-up perspective, but also from a top-down perspective, looking at PMIs, looking at activity surprises. Look at cumulative activity surprises in the US, and look at that for the last 20 years. We've never had a period with such strong activity surprises than we've had in the last 10, 11 months. So the reality is, for all the talk about the disconnect between financial markets, between risk assets and economic reality, that's not true. We've actually been now through 10, 11 months of continued pessimism in the estimates, both bottom up and top down. And the reality is actually that things have become much, much better than we all expected.
So, Max, if you look at treasuries, they're also telling us something else, right? That we'll see rampant inflation. Would you trust the markets more than central banks?
No, I guess when we look historically, I guess treasury yields are still historically in quite a low range. I guess what really treasuries have now said is like, well, the Fed won't be able to look through transitory inflation as much as they've told us. I don't think that is necessarily true. So if you look at, let's say, 5-year yields, they've hit close to 1% last week. That doesn't really make that much sense, right? If you look at 10s or look at 30s, look at the forwards, look at 5-year forwards, they are already above the longer term dot of the FOMC. That is actually pretty close to quite good buying territory. And speaking of valuations, that looks like pretty decent value to me, particularly for the sort of from mid Q2 onwards, when we see base effects in the dollar fading, base effects in energy prices fading, when we see, probably most of the really good data beats that we're now going to get in April and May, they are probably behind us then. So then after that, right, so over the summer, actually 10s, 30s in treasuries look like pretty decent value to me.
So we know that Kaplan's dot was pulled forward. He's expecting that there's a possibility the Fed will raise rates at the end of 2022. What I'm wondering is what inflation is going to look like at that point, because we will then be coming off the end of 2021 when we expect this spike. So are we still going to have the expected levels of 3% or higher at that point?
Well, Matt, let's not forget what we see right now and where we are getting into now, the next sort of 1-2 months, is a perfect cocktail. It's almost like someone scripted it, right? When we look at it, we had fiscal stimulus checks now at a time where vaccination programs in the US are much better than expected, where actually also, where the reopening process is much faster than expected. We see at the same time huge base effects from the weaker dollar, huge base effects from higher energy prices. All that is inflationary, right? And it's all happening at the same time. If we look a little bit forward, if we go to Q4, for example, what happens if we see a little bit of a comeback of the dollar against some of emerging market currencies, for example? What happens then to cyclical commodity prices, to energy prices, for example? If we see a little bit of a dip in energy prices in the summer, for example, suddenly in Q4, we might actually be starting to talk about disinflationary effects again. It's something that, seems completely out of whack with what's happening right now. But it's only 6-9 months away, and that is really something that we shouldn't forget. So right now, it's a perfect cocktail, but it's all very much transitory. That's what we shouldn't forget. And in 6-9 months' time, with base effects in energy prices, in FX, we could actually be talking almost about a 180-degree shift.
So does that mean the market has way overdone some of its bets on the timing of a Fed rate hike? We've seen a full hike priced in now by the end of 2022.
Yeah, I would say so. I would definitely say so. I think what we have to figure out right now is not really the rationale, but rather the entry point, right? The exit point from risk assets and the entry point into some of those safe havens, some of the developed market sovereigns. Think about gilts, think about treasuries, some of, like, let's say, Australia, for example. All those have seen a little bit too high increases in yields. And the challenge for us now is to find out probably in Q2, is it going to be now already? Is it going to be middle of Q2 or more towards the summer? That's the challenge. The challenge now really is about the timing, not really about the rationale, I would say, because some of that, some of those rate hike expectations that have been brought forward, they are very much based on the assumption that those base effects, those transitory effects that we're going to see come through now, and the huge data beats that we're probably going to see also in April, perhaps even in May, that they are not going to be transitory. And I very much doubt that, right? So that's the challenge. It's much more about the timing rather than the rationale.
Max, thanks so much. Never boring. Max Kettner, their multi-asset strategist at HSBC. Now, coming up a little bit later today, the global semiconductor shortage is leading the new business strategies for the sector. On Bloomberg Technology's latest special, Chip Crunch, anchor Emily Chang will discuss the challenges ahead with chief executives from Micron and Global Foundries. That's tonight, 5 p.m. in New York, 10 p.m. in London. And this is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the US, we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now let's get straight to the Bloomberg First Word News. And Iran says the first day of talks in Vienna on restoring the 2015 nuclear deal were constructive. Diplomats will meet again on Friday, but the Islamic Republic stuck to its demand that the U.S. lift sanctions first for real progress to be possible. Meanwhile, an Iranian ship was hit by mines in the Red Sea. According to the New York Times, Israel says it was responsible. The pandemic has wreaked havoc on the middle class. Well, according to the Pew Research Center, the global middle class shrank last year for the first time since the 90s. About 150 million people tumbled down the socioeconomic ladder, while South Asia and sub-Saharan Africa saw the biggest declines. The middle class encompasses about 2.5 billion people, a third of the world's population. And the richest person in the world supports investing in U.S. infrastructure and raising corporate taxes to help pay for it. Still, Amazon chief executive Jeff Bezos stopped short of endorsing President Biden's $2.2 trillion infrastructure plan. In a statement, Bezos said the investment will require concessions from all sides. Now, coming up next, we continue talking about possible tax overhaul globally with Simon French, Panmure Gordon, chief economist. We'll talk treasuries. Of course, we'll also talk about the IMF forecast upgrade. This is Bloomberg.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day. This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television. Emily Chang explores how a chip shortage snarled everything from phones to cars on a Bloomberg Television special, Chip Crunch, Wednesday on Bloomberg Technology.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now, there's quite a lot going on. I don't know if the markets are moving that much, Matt, but we're definitely looking at Archegos, Credit Suisse, and then we're looking at Toshiba as well.
Yeah, there are a lot of individual stories. There doesn't seem to be a unifying theme. There wasn't in Asia overnight, and we don't really see much of one. Now, of course, earnings are coming up, and that will be it for sure. But yeah, for right now, it's like, you know, pick some kind of narrative to try and match the moves.
Yeah, although we're looking forward to Jamie Dimon's letter, shareholders. I think that's published a little bit later, and then FOMC meetings. Kaylee, how is all of that playing out in the markets?
Well, you guys didn't do much to hype me up for this market check because you're right, there is not a lot going on. We are literally flat on the Stock 600 in Europe after a rally to a record high yesterday. When it comes to futures here in the U.S., we're also not really going anywhere. We're up just 6 points on NASDAQ 100 futures. So it may be that kind of day. I would note, though, that volume is pretty light. Where more action is, where a lot of attention is focused, is in what's happening in the bond market, because we are continuing to see yields inching lower. We're down just a basis point on the 10-year, but at 1.64%. This is significantly lower than where we were just a week ago. The market seems to have rereaded its expectations for the Fed. Maybe this is just an overheated sell-off. The question is this pause temporary or not? We'll for sure be posing that question to our guests. And then I want to note oil as well, giving back some of its earlier gains. It's now down 0.6% on WTI, $59 a barrel. That supply and demand picture continues to be weighed by traders. As for what's going on in pre-market trading, we're continuing to see strength in some of those cruise line stocks. Norwegian up by 3.4%. Luminar Technologies, which is an auto parts maker focused on autonomous technology, is up 1.6%. Beyond Meat is opening a manufacturing facility in China. That has the stock higher by 2 percentage points. And then we are continuing to see a recovery in some of those Archegos-linked stocks. Credit Suisse aside, Viacom, CBS higher by the better part of 1% before the bell, Matt.
Do we have a fake meat consensus already? Do you eat fake meat, Kaylee?
I eat it in ground form, like if it's fake tacos or something like that, but I have never had a fake meat burger. Like if I'm gonna eat a burger, I want a nice, real meat, juicy burger, Matt.
Interesting. I think I'd go the other way. I'd eat a veggie burger, and Fran will eat anything as long as there's chocolate
if somebody cooks it,
involved.
I'm like.
I think it's interesting. I was talking with Mark Cudmore about it this morning. He's he's very bullish fake meat longer term. And I actually got this chart from Mark Cudmore this morning as well. He was not too psyched about it, but I think it's amazing. And we are simulcast on London DAB radio. So for our radio listeners, first of all, I say, I'm with you. I get my information from radio too. I prefer it to television, but this is one time when you're missing out. I'll walk you through it. IMF forecasts for growth in Europe, the world, and the U.S. It's only a 6-month time period, which is why I think it's amazing. 6 months ago, we were looking at growth forecasts that were huge for Europe, 5.6%, and weak for the U.S., down at less than 4%. That's because the virus was raging there, and it looked like the Europeans had it under control. Now, fast forward, and the U.S. is basically vaccinated everybody already. That's an exaggeration. But Europe has done almost nothing. That's closer to the truth. So now the forecasts are for European growth of only 4.2% and U.S. growth of 5.8%. I think the change over such a short period of time, Francine, is pretty amazing.
Yeah, it is pretty amazing. I think I was reading something about the Commission saying that they're expecting member states to have enough vaccines if there's uptake in people wanting the jab to vaccinate. I think almost everyone, or about 70% of adults, by June or early July, which would be quite a feat for Europe.
They'll have the vaccines on hand, right? They'll have the supply by the end of June, I think the story was. Nikos Chrysolaris breaking that out of Brussels yesterday. But they won't be anywhere near getting it into people's arms because that's just not something a lot of European countries are good at. It's not going to be like the U.S. where you can go to any pharmacy or walk into any football stadium and get your jab. It's going to probably involve forms, signing privacy statements, jumping through hoops, big bureaucracy.
Let's wait and see. I mean, they have 2 months to figure it out. And after, the mayhem and the mess that we've seen so far, maybe they'll get their act together. Now, to the global economy, and the IMF has upgraded its growth forecast for the second time in 3 months, while warning about widening inequality and a divergence between advanced and lesser developed economies. Now, earlier we spoke exclusively to the French Finance Minister, Bruno Le Maire, about the outlook for Europe and why U.S. stimulus could actually be good news for this region as well.
Vaccination is on the right way. The French National Recovery Plan is on the right way. We have already disbursed 29 billion euros of the French National Recovery Plan, where the total amount is 100 billion euros, which is clearly the evidence that we are on the right track. But the point which is not on the right track is the European Recovery Plan. We have not seen one single penny among the 750 billion euros that have been decided last summer in 2020. I'm deeply concerned by the delay in the implementation of the European Recovery Plan. That's the key point.
But given what you've just said and what we're seeing in the US with the infrastructure plan, with the recovery plan, does Europe need to be more ambitious? Is Europe lacking in ambition right now? Do we need to go bigger? I know we don't even have the recovery fund, at the moment, but do we need more stimulus in Europe?
So there is not a lack of ambition. There is a lack of effectiveness. It's totally useless to put more money on the table and to make big announcements about 1,000, 2,000 billion euros if you are not able to deliver and to disburse the funds. The key point now is not to make big announcements, is to have a quick disbursement of the decisions already taken.
But do you worry that there's, overall there's not even enough stimulus, and you're right, nothing has been dispersed yet, and you're also trapped in a situation where the US is spending, inflation is going up, Treasury yields are going up, putting extra pressure on Europe. And is there anything that Europe can do about that now, about market movements?
I think that the US recovery plan is good news for the European countries. And I think that we should not be afraid by the fact that there is a strong stimulus plan in the US. I'm not concerned about the risk of having more inflation. I think that the key point now is to have an important economic recovery in the US. This is good news for European countries. This is good news for the European economy.
Well, that was the French Finance Minister, Bruno Le Maire, speaking to us exclusively a little bit earlier. Joining us now, Simon French, Chief Economist at Panmure Gordon. Simon, away from the doom and gloom that we're seeing in Europe, actually the French Finance Minister was pretty optimistic that things will get better in Europe as soon as the recovery fund money is dispersed. How quickly could that be?
Well, we're thinking June 2021 will be the time at which the money will start to be released into the domestic economies. And that is based on each of the member states coming forward with their own delivery plans, but also some agreement on a thematic level of how fiscal rules, the Stability and Growth Pact, will evolve in the face of what maybe was not a Hamiltonian moment in terms of the funding of this package, but certainly a movement towards more fiscal mutualisation, which comes with both responsibility to go with the rights of issuing common debt. So I think we're expecting it in Q2, but I think Matt is right, and he said at the bottom of the hour that the biggest conditional assumption within all the forecasts we've seen in recent days is the role of vaccines getting into people's arms, not simply the supply, and getting over embedded vaccine skepticism in the European Union.
But Simon, how much more stimulus does Europe need, just to counter what we're seeing in the US? Will they really be left behind otherwise?
So when you start to benchmark where the fiscal stimulus comes in on, with the European Union benchmarked against the United States, what you see actually is the European Union's fiscal interventions to date, even ahead of the bailout package, has been very effective in historical terms at maintaining disposable income levels. And actually, the story that has perhaps gone quiet over the last couple of weeks, but is very prevalent in developed economies around the world, is that shortfall in consumer spending that we would hope would rebound in the second half of the year. That is still very much intact because of the fiscal interventions that have already benefited EU consumer pockets. In terms of whether you do more, well, that is really a question as to whether you want to take the US model of actually having disposable income going above pre-COVID trends. And that is not something that I think the European Union are ready to do, because actually there is still institutional anxiety with the level of fiscal support that's taken place already. So it's not an economic question, it's a political question, and I think the political answer will be no at this stage.
Simon, I think it's pretty amazing that we won't see any of that money dispersed by the European Union until June of 2022. You know, I had a kid after the COVID pandemic started, after the EU agreed this rescue package, and she will be walking and talking before any of those euros go out to the countries that need them. It's an amazing display of sloth. And you know, I know you're an economist and not necessarily, you know, a market analyst, but why are so many investors willing to bet on Europe over the U.S. right now if the European Union is so slow at not only getting vaccines and distributing them, but also at deciding or getting money out the door after they've already decided to spend it?
Yeah, well, Matt, congratulations, but also I think, you know, I am an economist, but I do moonlight a little bit as a market strategist. And the simple answer to your question is valuation. If you look at US equities at around 32, 33 times the 10-year cyclically adjusted PE, and you look at Europe at about 14 times, then it's that valuation gap, and investors calculating that there is, while understandable valuation gap, there's no way that is going to close given the trend growth performance, given the near-term trend outlooks. That's still such a divergence compared to its historical norm that it's a valuation gap closure rather than investors kind of giving up on Europe per se.
Well, Simon, U.S. stocks may be expensive, but we also have $5 trillion in fiscal stimulus that already has started working its way through the U.S. economy, and we are continually getting upside surprise after upside surprise on the economic data. Yet the Fed says they're still on hold through 2023. Do you buy that?
Well, we're going to get some fascinating information later today in terms of the Fed minutes. Do I buy that outlook from the Federal Reserve? Yes, I do. But I think there are two big questions that need to be answered, and we'll start to get a bit more of the sort of granular detail on that. First of all, what is their definition of maximum employment? Jerome Powell at the press conference, the last FOMC meeting, said there's a basket of indicators out there. We can all see them. But yes, I think the market, in order to add a little bit more clarity to that timeline, will want to know, not all indicators within that basket will be made equal. Will we get any clarity on which ones are the most important? Secondly, what is sufficient progress, not just in terms of the forecast, but in terms of actual economic progress to start tapering the bond buying program currently running at $120 billion per month? That sufficient progress, I think, will start to crystallize around the turn of the year. The big question, I think, for markets trying to price the exact timing is when will the Fed be prepared to put forward guidance on that tapering of the bond buying program? Right. That will be the kind of detail we will need.
Simon, thanks so much. Simon French, Sir, Chief Economist at Panmure Gordon, joining us today. Now, coming up a little bit later this morning, our exclusive interview with the IMF Managing Director, Kristalina Georgieva. That's at 11:30 a.m. in New York, 4:30 p.m. in London, and this is Bloomberg.
us something you're doing that doesn't work out, where you've failed or something you can say you're not good at.
Let me tell you something. There is plenty that I am not good at and plenty that I've failed at, but I'm not afraid to fail.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
I'm short a lot of interest rates, right? The one story that could hurt this asset price inflation is that growth happens so fast. Everybody gets jabbed. We get the explosion of growth. We get 1 million jobs, then 1 million jobs, then 1 million jobs, and that pal by Jackson Hole flinches and says, "I've got to taper." And so to me, being short the 5-year part of the yield curve is a great hedge for any portfolio, crypto or non-crypto.
Billionaire Mike Novogratz speaking yesterday on Bloomberg. Let's bring in Bloomberg MLive editor Eddie Vanderwalt for more on the 5-year. Eddie, Mike Novogratz is short the 5-year, yet we've seen the 5-year yield move down 12 basis points in just the last 3 days. What is that about?
Yeah, you know, yields are really the big wild card in the market, and particularly that belly of the curve has spooked investors a little bit. I think, you know, a bit of a pullback is perhaps not overly surprising, but I think given what we've seen with inflation expectations, particularly with this morning's PMI numbers coming in, you know, those have just been showing that cost push inflation starting to come through, and we may just start to see that playing back into the yield curve again.
So, Eddie, I mean, everybody, I don't know if there's anyone who doesn't have an opinion actually on Bitcoin or treasuries at the moment. What exactly is priced in?
On Bitcoin or on treasuries? Look, I think I think the longer end of the yield curve is definitely pricing a bit of inflation. I think it's a little bit more confusion in the belly of the curve, and at the short end, everybody's expecting the Fed, you know, to stand pat. The Fed is definitely signaling that it's willing to do so. But you know, there was very good demand for that 50-year from Italy earlier, so perhaps even at the long end of the curve, things have been you know, there is some expectation that it's run too far, perhaps.
I once met Mr. T, Eddie Vanderwalt of A-Team fame, for those too young to know.
I remember.
He was literally wearing 45 pounds of gold. On his person, he was wearing 720 ounces of gold. You've been writing about the possible drops that we could see in the coming months on the shiny metal. What do you expect for gold as it goes back up over 1,700 an ounce?
Can I just say, first of all, you've just gone up several notches in my cool estimation, Matt. Anybody with links to Mr. T. Listen, I think for gold, the problem is, you know, gold is an asset very much like Bitcoin in some ways, in that you buy it in the hope that somebody else will buy it from you for more money. And right now, the long-term narrative for gold is collapsing. Whether economies, you know, whether Europe opens in 6 months or whether Europe opens in 3 months, the opening trade is the one that we're playing at. Inflation may be coming back, but central banks have a lot of, you know, ammunition in their coffers, and stocks are doing well. So the narrative for gold, there just isn't that doomsday scenario that we had last year, and therefore, you know, we're seeing ETFs sell off day after day after day at the moment, really.
Eddie, thank you so much. I have to say, the Mr. T Bloomberg interview is a must-watch. When we used to have dinner parties, I may or may not have showed a couple of my guests in the past at like 2 a.m. to watch that interview. Our Bloomberg MLive editor, Eddie Vanderwalt, joining us on Bitcoin treasuries and everything in between. Now, coming up, the World Bank President, David Malpass, that interview at 10 a.m. in New York, 3 p.m. in London, because it's a virtual IMF World Bank meetings this week. Yes, this is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance, the early edition. I'm Francine Lack in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, the one and only Tom Keene is back. He's co-anchor of Bloomberg Surveillance. And Tom, all in a huff because you're looking at global America, or actually you're looking at charts, but you're also looking at the Jamie Dimon letter.
Yeah, we've got two big things today, and one of them, of course, the equity markets and futures moving up. We'll have the managing directors. You spoke to Madame Lagarde the other day, Francine. Kristalina Georgieva scheduled to be with me at 11:30 this morning. This will be a spirited conversation. She is on fire on aid to the less developed world. From Bulgaria, Georgieva's original as a director. I'm really looking forward to that conversation. The Dimon letter, I'll be honest, Francine, I've seen it. It's embargoed right now. We will see this sometime this morning, and it is a profound statement from one of the world's corporate leaders. I'm not going to mince words. It's 66 pages, and Jamie Dimon is on fire.
Yeah, I think longer than expected, about two or at least three times longer. Tom, when the IMF, in the conversation of the IMF, how much will you focus actually on debt forgiveness?
I don't know. It's one of the themes there as well. Bring up the chart if you can quickly. This is the locomotive driving the caboose and the trains right now, and that is U.S. GDP up 6-point-some%, and then up 3-point-some% in 2022. In a chart back to World War II, it really shows this exceptional rebound of the American economy.
Tom, thank you. Tom Keene, co-anchor of Bloomberg Surveillance, up shortly. Now, there's quite a lot of things that we're watching. Kaylee, what's on your radar?
Well, now I can't wait to read the Jamie Dimon letter, Francine, but I'm also watching Carnival earnings. They're expected out before the bell today. Of course, we just got news from the CDC yesterday that said cruise lines can potentially restart operations in midsummer with restrictions. So it'll be interesting to see what kind of commentary surrounding that and how it changes the outlook is brought up on the call, Matt.
Very interesting. I'll be watching that very closely, too. And I know my radio co-host, Paul Sweeney, anxious to get on a cruise ship, will also be paying close attention. I'm watching Porsche, believe it or not, because our cars reporter here in Germany, Chris Rauwald, wrote a great piece about how Porsche is working with local tech companies here in Germany, actually one in Tübingen, my alma mater, down in Baden-Württemberg, to develop batteries that can beat Tesla. And this is really important because when you're working with battery tech companies in China, as most major car makers do, it's really tough to do the best job you can. So Porsche is kind of bringing that tech home and trying to do its best. That's a beautiful Taycan right there. I think, Francine, you'd look great in one of those.
I do, except I only usually buy Italian cars, you know, like Fiat, Fix It Again, Tony, the cute little ones, like the Cinquecento, so 1950s. I feel like I'm in an Italian movie with Audrey Hepburn. I'm watching the rollout of the Moderna vaccine in the UK. Now, this is also on the back of what we heard from the EU, the European Commission telling governments that COVID vaccine rollout could hit a key target earlier than expected under these new projections that hinge on people actually accepting the AstraZeneca shot. Now, coming up in the next hour, Bloomberg Surveillance continues. Robert Albertson, Piper Sandler Chief Financial Strategist. This is Bloomberg. Nagal, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing out at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim. We're going to be riveted to that, and we're going to do what is required.
This might be a negative quarter. First quarter might be a negative quarter for the U.S. economy. That's clearly not going to be the case.
The U.S. is back on track to be the locomotive. The problem is it's not quite as large as it used to be.
There's good demand. For as long as that demand is there, it augurs well for paying for this crisis.
When you look at the core PCE deflator, it looks like we've killed inflation.
This has all the classic manifestations of a very frothy environment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene, a simulcast, Bloomberg Radio, Bloomberg Television. Welcome all of you across this nation, around the world. It has become an eventful Wednesday. Lisa, let us start first with a continued market lift. Lisa, the market refuses to go down.
Well, how can it go down if it's got so much money being pumped into it, both from the Federal Reserve and from fiscal stimulus? To me, the key question today, Tom, is what the Fed minutes indicate. We're moving from a reflationary trade to, on the margins, fear of the Fed. What happens if they hike sooner than they say that they will?
Couple hallmark events today, IMF, World Bank meetings. They look at a world struggling in the pandemic, Brazil and India. And then what we also see, Lisa, is America doing better than good. I'm seeing in the last 3 days, Lisa, the beginning of extending the boom economy out further, out maybe past September, out maybe into 2022.
You know, I would say that the theme of the week and perhaps the theme of the month is, are we setting the bar too low or are we setting it too high? Again and again, whether it comes to health or whether it comes to economics, it seems as if we're setting the bar too low. And this has to do with Biden coming out yesterday and saying all Americans who are above the age of 16 should be eligible to get a vaccination, and there should be availability of the inoculations by April 19th, bringing that time frame forward. Again, time and time again, we have set the bar too low, and that, I think, is what markets are trying to catch up with. Tom.
Let me do the data check. We've got an important guest to set where this global economy is in a moment, so let me do the data check quickly. We've got equities up, futures up, well, a fractional, I'll say. The VIX 17, under 18, 17.91. I'm looking at the bond market with yields in, and this is a story of the last 2 days. Yields have really come in back to a center tendency. I did a fancy chart of the 10-year yield this morning, and at 1.64%. That is not above 1.70%. The real yield, desperate to have Jonathan Ferro return. Rumor has it he may tape. His entourage is really not sure if he can get back in time for the real yield on Friday. Negative 0.68% on the real yield. Currency market's not giving me much. Maybe some dollar weakness as well. I need a brief on a Wednesday because I've been buried. Lisa, what do you got?
I will just say it. I've heard a rumor, Tom, that John Ferro's entourage will be carrying him back to studio tomorrow, kicking and screaming from Capri. We will see about that. Today at 8:30 a.m., we're going to be getting the U.S. trade balance and just, I would say, the deficit, really, because that's what we're looking for. A record trade deficit for the United States. Demand picking up in a massive way, outstripping some of the supplies, and really giving a boost to importation, particularly from China, which raises some interesting questions about the relationship there. Then at 1:45 p.m., President Biden is going to be speaking about his infrastructure plan. Expect him to talk about Amazon's Jeff Bezos, who came out yesterday with a letter saying, we support you, Biden. We support your push for better infrastructure, and we even are okay with higher taxes. Of course, a lot of people pushing back and saying, well, you've managed to dodge taxes for so long. How are you going to dodge these? Very interesting to see how this gets woven into a beneficial talking point for Joe Biden. And then 2 p.m., this is what I'm watching most of all. And this is the FOMC meeting minutes. Basically, the key issue here, how much does the Fed recognize the message from the market, which is they are expecting right now the Fed to hike rates before the end of next year, even though the Fed is saying, nope, forget about it. We're not going to raise rates before 2024. Not only is the market pricing in a rate hike by the end of 2022, the market's also pricing in 3 additional rate hikes by 2024. How does the Fed push back on that?
Well, that's a parlor game to me. I don't put much weight in it, but the fact is the market is speaking, Lisa, and the market's looking here at a better economy and a higher rate regime. And we'll see when the data shows up. And the data is going to show up really what's focused on as well. 2 things I really want to point out. We are upon earnings season today, April 7. JP Morgan out with earnings, I believe, April 14th. JP Morgan out with the must-read for every MBA student, every CFA candidate today, and that is Mr. Diamond's letter. I am told it is lengthy. Full disclosure, I had a glance at it. We will see that sometime this morning. James Dimon on fire about what his bank has done in the pandemic and the view forward for his JP Morgan. Right now, Eric Robertson joins us, Standard Chartered. They have another unique characteristic, like every bank, like JP Morgan and others have their view. Standard Chartered has a character of looking at the developed and the less developed world. He is global head of research. Eric, I will speak with Georgieva today of the IMF. She's beyond concerned about a, not third world, but an EM behind in the pandemic. Is that your anecdotal evidence at Standard Chartered with your huge relationships that that part of the world is behind?
Look, Tom, I think it's a critical question. The way we're thinking about the world at the moment is you are going to see a fairly significant economic recovery in global terms, as you guys were talking about earlier. But the key factor is that there's just such a wide gap between the haves and the have-nots. You have countries in Asia like China and India that are going to come out of this crisis with very strong growth. The U.S. the same, but there are also large parts of emerging markets that are still struggling. Parts of sub-Saharan Africa, Latin America, etc. And so the gap between those performing well and those who are still struggling is just growing by the day.
Let's go back to Princeton economic history, and I'll be honest, folks, Princeton kept the lantern lit as economic history died for decades. Eric, I want you to talk about this idea of a divergence and the new phrase we're seeing once again, good morning, Mr. Gross in Newport Beach, that we're seeing a locomotive America. How does a locomotive America attach to the rest of the trains?
Well, look, Tom, this is really a key topic of conversation over the last month or so, the idea of quote-unquote U.S. exceptionalism. A couple of years ago and in previous times in history, that description, I think, has been fairly accurate, where the U.S. has been outperforming the rest of the world, the dollar, the S&P 500, all outperforming. This time, I think it's a little bit different. Yes, the U.S. is recovering with enormous momentum, and yes, U.S. interest rates have gone higher to reflect that. But the rest of the world in certain parts is also doing extremely well. Now, we have, for example, this trade deficit that you guys mentioned a little while ago. The U.S. is consuming at a rapid pace, but we're getting the worst trade deficit in decades, and that's actually been enormously supportive for the exporting economies of Asia. So again, it goes back to that theme of this divergence between the haves and the have-nots.
Eric, when you say that it's been beneficial for Asian economies, is this just China and Vietnam and South Korea, or is it broadening out to the entire region?
I think it's broadening out, and I'll give you a couple of examples why we think that. Over the last couple of years, we're seeing evidence that emerging market economies are trading more with each other than they ever have before, right? They're not just dependent on the United States or just dependent on Europe. And that diversity of trade in our minds speaks to the sustainability of growth. And as you said yourself, it's not just China, it's Korea, it's Taiwan, it's India, it's the economies of ASEAN as well. And so I think this diversity of recovery is really important and something that doesn't get quite enough attention in the market today.
Then do you think that when people talk about how yields are going higher in the United States and how this pressures emerging markets because this makes their borrowing costs in dollars that much more expensive, and because it sort of creates this trade deficit of capital, basically more capital will flow into the United States if there's a better outlook, do you think that that's overstated based on the boom that it gives the rest of the world?
Look, I think there's two ways to think about that. Number one, yes, we've seen the markets reprice their expectations for growth